Bill Gates and Warren Buffett both agreed that Charlie Munger is the most intelligent person they know. Charlie Munger once said, "Problems frequently become easier to solve if you turn them around in reverse. Unless you're more gifted than Einstein, inversion will help you solve problems." Now let's use a little bit of inversion to solve your trading problems. Around 90% of traders lose money. So what we have to do is ask, what are 90% of these traders doing? First, they buy breakouts and they sell breakdowns. Yes, they're literally chasing the stock price around. Second, they all try to cut their losses short and let their winners run. Where are they letting their winners run to? Straight out of their trading account? This idea sounds great in theory, but it just doesn't work. Third, their greed causes them to size their positions way too big. Have you ever heard the saying, don't overtrade, focus on the best setups, and increase your size on the good ones? Look, there's some merit to increasing your size during periods of better opportunity, but don't overdo it or eventually you'll be wiped out of the game. Number 4, they are afraid of reducing their cost basis because they might be capping their potential profits. For example, selling a covered call reduces your cost basis but caps your potential gains. Now listen, unlimited profit potential is like a mythical creature. Now you see these 4 things most traders do, but why do they do them? Well, some of it's human psychology, but most of it is because it's what they were taught by investment education websites. I know it sounds a bit hypocritical because I run an investment education website myself, but the difference is they tell you what will make you spend money. Unlike them, I will tell you the truth, even if it's not what you want to hear. Think about it, how appealing does "cut your losses small and let your winners run" sound? Sure, it sounds great, exactly what you want to hear, but anyone teaching this concept has either never traded before or they're just flat out lying. Now, that doesn't mean you have to have huge losses and tiny profits. If you're trading the right strategies, this shouldn't even be an issue. Now let's use a little bit of inversion and flip these points around, and here's your new trading strategy. First, you're going to buy into weakness and sell into strength. Why? Because it's exactly the opposite of what most traders do. Now you might be saying, but if you're getting long into a sell-off, how do you know when the sell-off is over? The answer is simple. You don't. Nobody does. It doesn't matter if you're Warren Buffett or if you're Jimmy Buffett. You don't know if a stock is going to go up, down, sideways, or in circles. And I believe that stock price swings are random for the most part, but ultimately it's human emotion that drives market moves. So just don't fall victim to your emotions. Number 2, you're going to book your profits and be patient with your losing trades. With a high probability trading strategy, almost all losing trades will become a winning trade at some point if you hang in there. If you're cutting your losses small, you're going to choke out a lot of good trades. And if you're trying to let your winners run, you're going to be very disappointed when your winners just don't freaking run like they're supposed to. Number 3, you're going to keep your position sizes small. It will allow you to make decisions based on logic rather than emotion. The only way to be patient with positions is if you're sizing your positions correctly. If they are too big, then the day-to-day fluctuations in your account balance will cause you to make bad decisions and acquire gray hair at a very young age. And lastly, you're going to reduce your cost basis by placing trades with a defined profit strategy. These are strategies with limited profit potential, but they have a very high probability of success. And listen, if you're buying options, you're doing the exact opposite of reducing your cost basis. Consistently reducing your cost basis will pay you far more than that one home run that you might hit. If you swing for the fence, you're probably going to strike out. Raking in small profits over and over again is where you'll hit a grand slam. Following these simple guidelines will save you many headaches and a ton of money.